Are you ready?
Ready.
All right, let's go. Kevin here, Top 1 Financial Advisor and best-selling author. We are here to talk about the stock market. If you've been investing for a while, you kind of figured out what your preferences are. Do you like certain types of stocks or do you avoid other types of stocks? For me, I'm someone who enjoys a good dividend stock, but I don't have to have it. I'm someone who absolutely avoids penny stocks. So we all have our preferences. And one of the biggest areas or preference profiles, if you will, is either value stocks or growth stocks. So in this video, I want to explain what both of those are, and then how do you find these and how do you define these. Now, everybody's definition a little bit different, but it's going to build on the conversation that we had yesterday. We talked about overvalued and undervalued. All right, so a value stock is that which is deemed undervalued. How do you define what is undervalued? Some people use PE ratio, some people use several other ratios, but today we're still going to stay focused to PE. It's the easiest one to understand. Now, the average PE ratio for the entire S&P 500 in 2022 was 25. Anything below that is usually pretty undervalued, and that comes with some advantages and disadvantages. Advantage is you are more than likely paying at what is considered a good price for something that we think will rise in the future. That is undervalued, that is a value stock. And when the stock market is choppy, when the economy is choppy, and when interest rates are rising, most investors move towards value stocks because what they see is all these high-flying growth stocks. Sometimes they are companies that are unprofitable. They're companies that are borrowing money and trying to grow aggressively and just look at our subscriber numbers, look at our customers. We're doing all this stuff and not profitable yet, but they are selling you on the dream and the hope that in the future they will grow to that point. Well, when interest rates are going up and there may or may not be a recession, you say, look, I don't know about y'all. I'm gonna go to the company that nobody's looking at. I'm gonna go to the company that I know is making money. I know they're gonna be in business. I know they're going to be solid. Those are value stocks, and we're compared to today. Now, another side of this is the growth side. These are companies that historically, they're growing 20, 40, sometimes 50% a year, and can absolutely change your life if you get in at the right time and if you hold for a long enough period. Tesla was almost always one of these until last year, and technically, so far this year, any company that's up 70% in 60 or less than 60 days is a growth stock. And while they have started to become popular, or not popular, profitable rather, early on, even 7, 8, 9 years ago, Tesla was known to just lose a whole lot of money when they were borrowing, and they were still growing. The stock was still growing. They were a growth stock. Usually those in the tech space are deemed growth stocks, but it's not always the case. And then those who are more boring companies don't seem to be jumping off the page. Those are usually value stocks. Now, here's the thing. A value stock right now can be helpful or not helpful, depending on how you want to look at it. So one example of what I would consider a value stock is Chevron. That is CVX. They're in the energy space. I don't currently own them. I don't plan on owning them. But they have a PE ratio that's less than 15. So the average is 25 for last year. They're under 15. They have been okay, but they're not where ExxonMobil is. For example, ExxonMobil grew more than 40% in the last year. Chevron's growth was only 23%. Both are good compared to what we went through last year, but Chevron is it's undervalued. Even in the last 6 months, it was only up like 5, almost 6%. Not all that impressive. So the question is, if ExxonMobil was a growth stock and Chevron was not, do you want to make the 40% or do you want to make the 23%? That's up to you. That's up to you. That's if you want to be in energy altogether. Another example here, we're going to stick with Chevron as a value example. Would you consider something like United Rental or even John Deere as something as a growth stock right now? Personally, I would, because even though United Rental is not a company that is new, it's not a company that's tech savvy or anything like that, but it's up more than 40% in the last 6 months. And in my view, I think we'll continue to do well, due primarily to the infrastructure bill, what we expect to see in terms of new homes, new construction, rebuilding railroads, and all that type of stuff that we obviously desperately need. But aside from that, I think it's going to grow at a higher pace than what the entire stock market is. You can, again, throw Tesla in here if you choose to, but those are the primary camps. Now, how do you find and define what is growth and what is value, and what is the easiest way to kind of find these? My best tool and answer to you is to use a stock screener. I think that is the easiest way for you to plug in what you think is value, and it'll spit out a list of stocks, and what you think is growth, and it'll spit out a list of growth companies. Now, Insider members only, I've done several videos, but definitely one on the growth side. We're actually going to do one on value today. So if you want to join that, you want to make sure you hit the members only. However, there are a few tools you can use. Yahoo Finance is one of those. They have a stock screener. You can put in your parameters for what you're looking for. If I want to sort for the S&P 500 and every company within that, because at least I'm, instead of, I don't know, tens of thousands of stocks, I can at least say, hey, here are 500, and then kind of narrow down from there. That's what I like to do. But you can set it for whatever parameter you want and say, I want every stock that is less than 15 price to earnings ratio. You can do that, and it'll spit out that list. Now, is every company there profitable? Is every company there worth investing? And is 15 your bar? That's totally up to you. Okay, that's totally up to you. It's not the only thing that you can put in there. So Yahoo Finance is one. My favorite though is FinViz, F-I-N-V-I-Z. This is the one I've been using for years, and it's free. Both are free, and there are certain parameters that I use to determine what I consider value. If I'm looking for value stocks, that's where I go to, and if I'm looking for growth stocks, I'll put in different parameters to show me what I think are the best stocks for growth. This is how I found and have done more research on Chevron and URI, United Rentals. It is one reason why I'm invested in John Deere, because what I sold it for and found on the growth side, I would prefer to kind of lean towards growth in certain areas. That's what I'm investing in. You've seen me invest in John Deere. You've seen me invest in several stocks. When we talk about those, it's usually because they fit the bill. It fits what I'm looking for. Growing faster than the S&P 500, financially sound, so on and so forth. So you can use a stock screener. There are several out there with that. FinViz and Yahoo Finance, those are two of my absolute favorites. And again, this week in Cyber Members Only, I'm going to give you my value screener, because I've already done one for growth. But most importantly, if we don't know where the stock market is going, you want to choose a company that you think is valuable and it kind of flies under the radar and is prone to do quite well over the long haul. That is typically what value stocks do. As an investor, how much did you have in growth? How much did you have in value? It really depends. For me, I don't really have, and I don't think they're really true metrics. Like you have to have 10% in this area, 10% in whatever other area. I think the key is, do you have the right stocks for the right time? Not that you need to, day trade or swing trade or anything like that, but you want to make sure your portfolio matches what we're going through right now. We know interest rates are rising. We know, we don't know whether or not we're going into a recession. We don't know that answer yet, but we do know that inflation is doing what it's doing. We have seen unemployment creep up just a tick. So what are the best stocks? What are the things that we know are consistent? This is the reason why I've been talking about healthcare and several other companies that I'm not going to rename, because I feel like I do it every day. But that is what you want to do. So I'm not necessarily looking at my portfolio and saying, I need this much growth, I need this much value. I'm more so saying, I need this industry. And within that industry, let's say healthcare, what are the growth stocks within healthcare? Okay, what are the value stocks within healthcare? And perhaps I'm getting both of those. An example here, I would consider, based on how Merck has done in the past, last 6 months, last year, Merck is probably a growth stock. Now, I know healthcare is not necessarily a growth industry unless you're talking about Moderna or biotech. But if you look at it objectively, you could kind of nod your head a little bit and kind of lean towards Merck being a little bit of a growth stock. At least, if nothing else, momentum. It's moving in the right direction. So I could do that, and I could say, well, let me add Pfizer. Pfizer is usually considered a growth stock, and personally, it's, again, under that 15 PE. That's not the only measure in the world, but pays a dividend, it's under 15. Perhaps Pfizer is one of those. So my view, if I think healthcare is going to do well, I've got me a growth stock, what I think is a growth stock, and then I have what I think is a value stock together. And more likely than not, I'm probably going to do well. Because if healthcare does well, those two are probably going to do well. And I have, maybe one that is overvalued. We never know with Merck. And I definitely have one that is likely undervalued in Pfizer. And both should do well if, and these are all caveats here, should do well, and if healthcare is going to do what I think is going to do. And obviously that's not a guarantee. So we will see how they do in the future. That's not a recommendation, not putting them on any list, but if I'm looking to build my portfolio, that is what I would do. Start with the industry first. Then once you kind of narrow down the industry, which you can do with a stock screener, then say, what is my value stock, what is my growth stock, how many of these can I find in that space, and which ones fit best with my portfolio. Okay? All right. that is it for me. If you want to learn more about using a stock screener, if you want to get that growth screener, as well as that value screener, you know what to do. That link is right here for our members only. All right, talk to you later. Bye.